Happy third Thursday, everybody. And now let's talk automation.
All right, this time we're going to go with second time's the charm. Sounds like we were live, and then I got a nice little error that told me that we weren't. So from a technology perspective, sorry for that. Really great experience hosting from not my house for the first time this time around. But thank you, everybody, for joining us. Today, we're going to be talking about transformation in the insurance industry, but maybe a little bit of a different take behind that than what our typical conversation looks like. So I would love for everybody who's joining us to jump into the chat and let us know where you're joining from and have a conversation with us throughout the session today. But before we dive into the focused conversation and the questions that I have for all of you, Nick, I'm going to come to you, and can you start by just giving us a real short introduction to tell everybody who you are?
Thank you, Emma. I appreciate it. I wanted to dance to that music of the intro. It was really hip, so I like that a lot. My name's Nick Lamparelli. 26 years in insurance, everything from mom and pop corner auto and homeowners insurance to brokering and underwriting commercial property. 5 years ago, I started an MGA in the commercial flood space, and currently I'm spending a lot of my time just focused on problems in insurance, advising and consulting with startups on strategy and what they really need to be thinking about from a technological and insurance standpoint.
Wonderful. Thank you. So, Bryan, I'm going to come to you to do the same. Can you give everybody an introduction, please?
Yeah. So I'm Bryan Falchuk. I'm just outside of Boston, and I've been in insurance a little less than Nick, but 20-something years. Mostly on the carrier side, a bit of consulting at McKinsey, and then I made the big jump after being a chief claims officer to the insurtech side, and helped build out an early stage insurtech that is thriving right now. And coincidentally, it started thriving when I left. So maybe it's stuff I was doing, or it's just getting rid of me made everything better. But either way, I still work with them, and I work with a number of other insurtechs and carriers as well, trying to think about how the industry is moving forward and how do we navigate that. There's tons of change. Tons of disruption, but lots of opportunity created by all of that. So I have a lot of fun, and I spend a lot of my time talking to Nick. So Nick's working on solving the world's problems, and I just get to talk to him. So it's been a really interesting ride.
Thank you for that, Bryan. And I've got good news, everybody. My husband forgives me for messing up and not going back to thinking that I didn't.
The family is safe.
I also see a handful of other folks that did make the jump with us. So we've got some people from California as well as Boston, and some of your friends over in the UK as well, Kieran, joining us. So I didn't say it on this episode, but hello, everybody. I'm Emma Roloff, and I'm going to have Kieran, who is my counterpart here on the third Thursday, give his introduction now.
Yeah, very quick then, just in the sake of time. Look, so my name's Kieran, co-host with Emma. We're as bad as each other, if that makes sense, and naughty when it comes to these shows. I've worked in business transformation, business technology for 27 years. Half that's been insurance and insurance broking. So I've ran insurance brokerages, working in every single part of it, worked for insurers. So I understand both sides of the coin, as it were. Can't wait to get talking today in a little bit more depth about insurance broking, auditing, insurtech, and everything else in between.
Thank you, Kieran. Okay, so to get into our insurance-based conversation, Nick, I'm going to come to you with our first question. And so I teased this a little bit when I was talking, and now I don't know in which introduction, but we're talking about transformation in the insurance industry today, but in a little bit of a different way. And what I mean by that is oftentimes when we're having this discussion about transformation in insurance, we're looking towards operational efficiencies. But today we're going to kind of take a little bit of a different approach and talk about how data is changing maybe the whole life cycle of insurance. So can you share your thoughts on kind of what kind of set us up for the rest of the discussion here?
Yeah, so that's a theme that Bryan and I have been pulling on, a thread that we've been pulling on for a few months now, because it seems as though it's become clear that the challenges that are starting to emerge around technology. So in the prior decade or two decades, companies in the insurance ecosystem have predominantly been concerned and had anxiety around their internal technology to deal with their operations. So policy management systems, claim systems, CRMs, all of the different technologies that were required to make them operationally efficient. But what we're now seeing, and where we think there's been an inflection point, Emma, is that the technology that we need to run in our operations is affecting our entire lives. I mean, just look at what we can do now, today, here, going live stream with a video on a laptop with my my AirPods outside in Florida. It's changing everything. Vehicles are now hardware for software. Vehicles have changed. Vehicles have sensors and other technologies built into them that are there to help the driver prevent crashes. That has a direct effect to insurance companies that insure auto. And so we're at that inflection point now where we're going to start seeing that similar kind of technology invade all sorts of spaces. It's going to invade property insurance with smart devices and IoT sensors. It's going to change life insurance and health insurance and disability insurance with the ability to wear wearables. There are now devices, Emma, that you can literally plug into the back of your arm that will, in real time, measure your blood glucose. That changes everything. And from an insurance company or a company that's in the insurance ecosystem, that means that the things that we're insuring are changing underneath us. So homeowners insurance, for instance, or auto insurance had not dramatically changed in the generations prior. And just in this one generation, auto insurance has dramatically changed with the ability of having telematics and what is happening outside, not only with the sensors and the technology in the vehicles, but the technology outside and our ability to use ride share, and coming soon to a theater near you, autonomous vehicles. So that's kind of what stirred this particular discussion, is that the thread that we've been pulling is the insurance ecosystem is ill-prepared for this inflection point. They were ill-prepared or not really up to speed around the technological, the transformation that was required to get digital with all of the technology that had changed in the last 20 years in their internal operations. They are definitively not ready for the technological change that's going to change the actual exposures that they run and manage day to day. And it's our view that a lot of insurance companies are going to be in a world of hurt in the next 10 years. This inflection point will be a dagger to many of those insurance companies. So not a quick summary, but I think that's going to be the topic.
As you know, if you had gone on too long, I have the control, so I could have pulled you off. Before I jump to you with our next question, Bryan, I do want to just pop up. We've got a couple of other folks that are joining us from Florida. I see Louisiana, as well as some more of our international friends making their way into this broadcast as well. So thank you again, everybody, for joining us. Keep questions and comments coming in. As we do every month, we will make sure that we're interacting with any questions that we don't get the opportunity to directly address on the live stream. So, Bryan, we've obviously been talking about technology and some of the components that Nick mentioned, like, bringing in technology and driving around our own little virtual computers. But can you dive into a little bit more of what is the underlying technology that's driving these innovations for us?
Yeah, so it's showing up in a number of different places, and Nick talked about a few of them. But if you think about all of the computing and sensing tools that are out there, I've been focusing in on the car space lately because I'm a car nut, but also because it's really tangible and there's a lot of things happening there. So it's an easy one to kind of envision what's happening. If you look at kind of the 1.0 version of telematics and you plug in a dongle, you run an app, that's fine. It can tell you a little bit about, how fast is a car going? Did it accelerate really fast? Did it decelerate really fast? Hard braking? And how many miles did it drive? That's all useful. And it's more than we knew about a risk before. But when you look at the 2.0, or maybe it's even 3.0 world of connected cars, you now suddenly add something really critical, and that's context. And I think what Nick is talking about is adding context to our understanding of exposure. When we underwrite, we're looking at past history and trying to size up given the profile of who we're looking at or what we're looking at or the business we're looking at, how does that match with our past experience, which has served us pretty well over the years? What if we didn't have to do that and we could actually see the exposure and what it's actually doing always in real time? And there's pricing we could do with that in real time. And in some cases, there's regulatory constraints, or maybe today there are. So we can't keep changing the price, but we can change our understanding of that risk always. And we could at least make different decisions on renewal or at the point of handling a claim, or maybe interceding and getting in front of a claim before it happens, because we knew what was coming. And so we could predict and step in and say, hey, this is where this behavior is heading. What if you did this instead? You'd lower your risk. So it just changes the nature of engagement from one that is based on predictions made off past behaviors. And then you file a rate change, eventually it gets approved. And so you're always sort of playing catch up with changes in your exposure that you can't keep pace with because of that. And that's kind of Nick's point, that your book sort of erodes from underneath you. Moving from that to a world where by embracing this data, we can actually bring full transparency to what the true exposure is. And you think about for the insured, they always feel like they're overcharged for their insurance. What if they could have that same transparency? And so it wasn't this sort of like adversarial nature on the price and, you're cheating me and we're undercharging you and we think we should charge you more. No, I'm paying all this money and getting nothing for it. What if we all understood the basis of it because we could see everything in real time? I think that's really transformational. And it could be very disruptive, and it could be this destructive moment for some carriers. The reason why I like to talk about this stuff, and I think 2030 is even a little too early for it really hitting us, but today is the date when we actually have to start planting the seeds and making changes. So whether it's 2030, 2035, or 2050 for some of this stuff, really doesn't matter. This is the time actually where we start to make the changes in our capabilities, and more than anything, our mindset and how we look at exposure and these tools and data. And that's where I think we need a wake up as an industry. I think there's been some great conversations, and it's at the point where we should start to take action. And the cool thing is those actions are actually really low cost. And I don't mean the actual cost of doing them. I mean, the chance that you do some of this stuff and it ends up being worthless or doesn't benefit you, it's sort of only upside. So there's a number of things we can do to prepare for these potentialities. And no matter what, they're sort of becoming table stakes and good decisions for us strategically and operationally anyway. So it's sort of a win-win. We might as well engage in this change, because I think it's creating a lot of good opportunities for us. So it doesn't have to be this doomsday feeling. It can actually be exciting, but it takes embracing it.
Thank you. So Kieran, I want to come to you with this next question. And this isn't a new topic for the third Thursday, but a slightly different nuance of it. And it's the idea of what types of skills are, folks in insurance companies as these shifts start happening. So we talked about what we're seeing at the industry level, what technology is driving that, but what does this mean for the people that are doing the work? And what types of skill sets do they need to actively be building or thinking through to be successful in this new way of working?
Yeah. So again, for insurance industry, as you and I have talked about many a time, Emma, the same skills will apply, in insurance, in finance, in cyber, in whatever else. So those are the basics, deep industry and sector knowledge. This isn't about replacing people. This is about getting subject matter experts, continual, ever increasing knowledge and expertise in their area. Analytical, statistic, IT skills, all those are absolutely key, because there's that much data around. As Bryan was mentioning a moment ago, the real difference is now it's contextual, it's in real time. There's tons of it, and it's coming in structured and unstructured and semi-structured formats. So again, the ability to interpret and understand all that, pay attention to detail, have really great verbal and written and communication skills. And some of that's at distance now, where, as you and I know, and we've talked about before, the best talent doesn't necessarily exist within 10 miles or 20 miles or 30 miles of an office. It's global. Good judgment, good negotiation, good decision-making skills, all those things are still demanded and created, and still people need to invest in those skills themselves. Organizations need to wrap their people strategy and change management, which I know you're passionate about as well, strategy around building workers for the future and not waiting years, starting to do that now. But the real question becomes, look, how do you actually create a differentiator with those excellent people? Because people can build skills, people can spend money and hire the best underwriters, the best actuaries, the best whatever. So how do you complement and create a differentiated competitive advantage? Well, that's with those exponential technologies that deliver better service, better response, and better decision quality times. So when you're looking at insurance, look, who are the technology and underwriting and actuarial and data science professionals who understand AI and maybe risk engine technologies that help them make better contextual risk-based decisions, who understands the AI and the OCR to be able to study insurance proposals at scale and at speed, who controls the technology to allow you to deal with wider varieties of statistical information using special software. And as Bryan mentioned, it's not just about, what's happened in the past. It's the predictive stuff, it's the prescriptive models and the analytics that can leverage a wide variety of these things to help you make decisions. Be that, look, do I need to reinsure? Can I turn this down? What price? What interest rate do I need to charge this at? Who understands the automation technology and to allow specialists to liaise in real time with others. I'm not talking about just using RPA. We're talking about decision tooling, real engagement tools to make better underwriting and pricing decisions, to keep, real detailed contemporaneous notes that can be examined at a later date that allow companies to make better decisions, who can liaise with specialists like doctors and insurance and risk profiles and whatever else. Like, where do you get all these skills to augment exceptional individuals? And the answer is organizations need to invest in technology, they need to invest in their people, and they need to invest in their change management and digital transformation structure, strategy, models, and methods to allow organizations and the people inside of them to truly succeed and truly create a competitive advantage in what appears to be to date to be a pretty much incumbent, invested, slow-moving, in general, not everybody's the same, market where insurance companies are getting their lunch eaten by new people coming in and operating in different ways, faster, better, more digitally, with capable people who are really well augmented with great tech and great change management plans.
And you do know that you're coming after my heart when we start talking about the people and change management side. But I have more questions to get to, so I'm not going to go on my rant. Anybody can visit with me separately to talk a little bit more about that. Excuse me. So Nick, I want to come to you with the question that kind of pulls off of this idea of what skill sets do we need, but also how do we find the right balance between this influx of data that we've got and updating actuarial models and finding, again, the right balance between how much we're relying on the technology and the data and those insights versus some of those traditional models, and how do we kind of solve that puzzle?
Well, that's a good segue from what Kieran just described, and I think Bryan and I have touched upon this as well in many of our prior conversations, some of which have been recorded. But a lot of it boils down to culture, right? So it's the investing in people makes a huge difference, but you can't have those people leave once you make the investment in there. And I would sort of unwind or rewind the tape all the way back to the beginning. My big fear around this inflection point and all of the changes that are going to be required are that insurance companies are not culturally set up to succeed. They're living in an old paradigm. And I would actually say, I would describe it as they are analog companies in a digital world. So just making the investments is similar to many of the companies I've seen in the past 5 years who have made huge investments in their internal infrastructure to basically stand in place, to be running in the same spots. The investments themselves were not worthwhile. I would almost beg anyone that has that kind of influence in their internal company that putting in a new technology is not necessarily going to help you. Hiring the best talent isn't necessarily going to help you if you have a culture that's not going to allow those things to flourish. And I think, Emma, a lot of it boils down to you. There's really no room any longer for an analog company to live in a digital world. There are some business models at a carrier that just can't seem to sort of bust out of that sort of model. There are some business models that they can have, but ultimately they're going to have to digitize. They're going to have to transform. I almost think if they cannot transform their culture and force themselves to become that digital version of themselves, and also clarify what their mission is, all of the technology and all of the good hires are just going to be wasted investments, because in this day and age, you can't hire talent and expect them to stay in a culture where those people don't believe in the mission. You need to be able to brand yourself as an organization to this young talent and show that there's a mission. And if there's no digital component to it, if they don't understand what the mission is, and they come in and they're struggling with cube spaces and just irregular work from home strategies and technologies that add friction, that add work to their pile, that don't seem to be making a difference, you're going to lose those folks. So that's kind of the shingle I want to put up around this particular topic, is that we can talk a lot about who to hire, what kind of skills they should have, how you should be managing those skills, what kind of technology you should buy. But I think it's all for naught unless the culture changes. And I think that's the big thing that has to occur. That has not occurred even in this internal technology transformation. You still had analog companies that were trying to plug in technologies. They were remaining analog companies. I think the shift has to be made, and Kieran, I think, nailed it. I think you'll have a lot of digital companies that are maturing, and they're just going to eat those companies' lunch. It's just there's no way around it.
Thank you. So I see some of the comments coming through, and I think that this also gives me a nice, and it's going to be a paragraph on the screen. So people are not going to be able to read it all, but you have that chat available to read the whole comment. And this is a nice segue for me to come into kind of our last question here. And we're going to go over our technical 30 minutes because of our technical difficulties. So hang tight with us. We're giving you your full 30 minutes. So Bryan, my original thought process on this question was to talk about how does all of this data actually change our pricing strategy? But I want to add in a little bit of how does it truly give us the transparency in that pricing model as a consumer as well? Yeah. So it's kind of a dual question now, because I'm adding on from what we got within the audience.
And I think the question's great. It's that, does all this additional data take away transparency? And I think actually, all due respect, I think Alexander asked the question is sort of conflating two things, but it's perfect because it speaks to what Nick's just saying. The data itself could be creating more transparency. The question is, how's it being used, right? And I think to the Nick's point around culture, if you take in this data and you're not using it smartly and effectively or clearly, because Alexander's question was like, the rationality in the conclusions made from the data leads to consumer confusion. It's not a lack of transparency. It's frankly a failure of using the data effectively. And a great example of that is hard braking incidents, which is one of the things I mentioned. When you don't have context, you have no idea if hard braking is good or bad. I brake hard because a ball's rolling out into the street, and I know there's no cars around me, and I know chances are there's going to be a kid following after that ball. The right thing, the safer thing to do, the less risky thing is to brake hard and make sure I don't hit a child or, something horrible that could happen. But my dongle says hard braking event. Then it's up to my carrier to say, well, how do we interpret these contextless kind of data points? That's a transparent thing to say, like, hard braking happened at this time and date and place. But for them to say, oh, you're a bad driver, so we're going to charge you more, that leaves me angry and confused as a customer because it was good behavior. Other carriers have said, well, because we don't know, we're just going to ignore it. So there's transparency in the data. It's not harming anything, but the carrier's not doing anything with it because they've realized we don't know if it's good or bad. And if we make the wrong call on that, we're either giving credit to someone who's a bad driver, and we don't want to do that, or we're penalizing someone who's a good driver, and we don't want to do that either. There could be regulatory implications of it. We could anger them and they churn. And this is a retention business. That's how you make money in this business. It's not off a single year policy. That's what specialty lines might be about. So I think it's not the data itself. It's how we're choosing to engage with it. And to be fair to your question, there are absolutely carriers who are not doing this the right way. And there are carriers who are. And so the cool thing is, it's all possible. The tools are there. The mindsets are there. It's just whether you've brought them into your carrier. And I will say my own carrier, I'm changing cars right now, has exhibited which camp they fall into. So it'll be interesting to see how that plays out. I'm talking to some of their executives there to share my insights, and we'll see how they take that feedback. But I think that's very telling. Do you take this as, oh, wow, thank you for bringing this to light, customer? Your experience is actually what matters. And we have all these excuses of why it is that way, but you don't actually care about that, right? I don't care that they're big or that they have, this system constraint or blah, 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 because here's another carrier in the same context as you who's doing it differently. So clearly we can do better. It's a question of whether you've chosen to. And I think that's really the heart of the issue. So to Alexander's point, that to me is, as an agent or broker, how you should also be guiding where you direct your customers for coverage. Is that carrier thinking about this the right way, or are they sort of using it as marketing? But the reality is in delivery, they're going to use it against you or not use it effectively and leave your customer very unhappy.
So I want to add one question to the audience, and hopefully people will be willing, because this idea has been going through my head again over and over at the event. And just to your example, Bryan. So as a consumer right now, I don't know if I want telemetrics as a part of my policy because it doesn't add a lot of benefit to my user experience at this point. Now, the carrot is that it drives down your price of your policy if you're a safe driver and all the rest of it. But I'm curious, with the group that we've got live, how many people would be willing to adopt that with the potential of cost savings, and or individually just kind of weighing your risk of, are you ready for the potential of that data to be used in a way that maybe you wouldn't seem as fair? And
Amen.
Yeah, because truthfully, I speed a little sometimes, and that kind of stuff, until you get to the point where you're actually having cost savings that's associated with the better behavior. And it is a kind of industry standard versus that marketing side of things, which comes first, the consumer side of it, demanding it, or the insurance companies actually adopting the model that's going to drive the behavior. And, it goes to life insurance with your Apple Watch or data that's coming from, it goes way, way beyond just this auto insurance component that we're talking about. And how much data are we as consumers ready to give up to our insurance providers, willingly or non-willingly, depending on, how smart our cars and other devices get, to potentially, drive this innovation within the industry. So I'd just be curious. I see a couple of people that, we've got a split audience. No, thank you, as well as being willing to do it. And so I think that's the other question that I keep going round and round in my head about, is how do consumers actually feel about these ideas? Because it's coming. And what does that mean? And how do we adapt our behavior in order to be kind of rewarded by these systems as well? So,
good question, Emma. I have to wait on the answer there.
It's
this around all day, and this gives out more data than any insurance policy.
Yeah. Emma, what you just described is a problem for analog companies in a digital world. Mm-hmm. For digital insurers, right? It gets back to, who are you and what's your mission, right? And I would posit that the mission will become less and less about pure risk transfer as the product and the solution. So going all the way back to what Karen described as some of the skill sets that are going to be required, one of the key skill sets will be product design, right? In a digital environment. And how do you do the appropriate A/B split testing? How do you create minimum viable products in this world where you will have consumers who will be vehemently exposed to giving up their data? What is the carrot that you're going to use? And I think the one tool that we've had as insurance professionals when creating products is, we'll give you a premium discount. That's run its course, right? It's got to be more than that. So you will see adoptions of new use cases, of new things like tokenization, things like rewards programs. How do you get people to do the right thing, Emma? How do I get you to stop speeding, right? And the phone is a marvelous tool to be able to do that, because I have seen enough use cases where people were opposed, but then saw the benefit of that. And I'll call it manipulation, but that's the marketing that has to occur. And that can only occur in a company that has its culture and mission properly set, right? For the old school companies, they can't survive in that world.
Emma,
Now
can
you
I-
opened the can of worms, Emma.
I know, Brian. I'm gonna let you, because again, I'm going rogue today. I had all sorts of technical issues. We'll go over 30 minutes. Brian, say your piece, and then we'll wrap for the day.
All right. The one thing I'd add is, and we're really bad about this in insurance, we think we're what matters, and we think in a vacuum. We don't matter. There's no engagement in our product. We have to go back out to the auto industry or whatever the space is that's getting insured. And this is something I just talked about in a paper I put out. There are tremendous changes going on in the OEM, auto manufacturer, and sales world in how cars are sold, connected car features, a push for many more different subscription models, including of the vehicle itself. Insurance comes along for the ride and is tied into lots of other things going on a safety and connected front. So it's not just like, well, which policy are you going to buy, this one or that one? That paradigm is going to be shrinking further and further in terms of how auto insurance or motor insurance for our European friends, or non-US friends, at least everywhere else they call it motor insurance. We should too. It's changing. And so for us to have that kind of ego and hubris to say like, well, we don't want to sell telematics. We're doing it the way we've always done it. We think this is a flash in the pan. That's like thinking the internet is irrelevant 20 years ago or 25 years ago. Because we don't, we use the facts. Like, that's awesome, but the world's going to move. And so we can't be so insular. So I do think there's a need to be a little bit broader and recognize like we're not the dog here. We're that tail, and we're not wagging the dog. We're getting wagged. So be mindful of that. And this is our chance to either participate or get left out because we thought we mattered and we didn't.
I want to end on the note of, I really appreciate that while you were pretending to be an old insurance company, you added the word "the" in front of facts. That just really, took it to a different level there. Thank you everybody so much for joining us. And Nick and Brian, it was a pleasure to have you both for the conversation. And thank you everybody for hanging on as we situated our broadcast today. The replay will be available, and we'll make sure that gets into the hands of everybody. But thank you so much, everybody, for joining us, and happy Third Thursday.